Welcome back, traders. This is our weekly gold market review. Gold's price has seen a major run upwards for the past 3 consecutive weeks and managed to reach even higher on Monday but finished lower eventually. The recent turn upwards for the yellow metal ignites a new fire for traders as the possibility of a rebound at even higher grounds seems to create further excitement. Through our weekly report, we will be overviewing some of the major factors that tend to move gold's price, while our technical analysis at the end aims at providing important information on significant levels to traders. First, we start with the relationship between the US dollar and gold. The dollar index, which monitors the strength of the greenback against other major currencies, has dropped to new monthly lows during the previous weeks. The price action confirms the correlation between the US dollar and the yellow metal tends to be strongly negative for the time being. Speaking on the US economy, some financial data in the previous week could have played a crucial role for the trend that gold has formed in that time frame. US inflation data for March, released on the 13th, a reading that we had noted as crucial for gold trading, improved from 0.4% to 0.6%. Gold traders are very interested in inflation due to the fact that gold has traditionally been used as an economic measure against higher good prices. On the day the news was released, gold gained approximately $20 in value. On the 15th of April, a number of US economic data, including weekly initial jobless claims, industrial output, retail sales, displayed improved readings and in some circumstances better than expected, which again created bullish reaction for gold's price, which added approximately $25 upwards. The trend persisted also on Friday the 16th, but was not as strong as the previous days. From the pre-mentioned, we realized that gold's price reacted positively to US financial releases that pointed to improved economic circumstances. The question is whether this tendency will be continued in the current week. On the other hand, this week's economic calendar from the US is equally interesting and could be useful to traders. On the 22nd of April, we get the weekly initial jobless claims figure and the existing home sales figure for March. On Friday, we get the preliminary manufacturing and services PMIs for April, as well as the new home sales number for March. Traders should approach these releases with caution as they could move the gold market extensively. As a final note, we must refer to the US Treasury yield activity, which is also among the subjects that greatly affect gold's price action and should be taken into consideration by traders. Last week, US Treasury yields fell to a 5-week low, while gold rose to a monthly high. Fundamentally, the market's focus continues to be on the Biden administration's $2 trillion infrastructure plan that seems to delay for the time being. Moving now to our technical analysis, please note this is gold's 4-hour chart. Gold has been in an upward momentum since the 31st of March. The highest level reached since that date for the precious metal is the R1 1785 resistance level that was briefly tested on the 19th of April, and the price action moved lower thereafter. The next levels that we have set in place even higher are the R2 1800 resistance level and the R3 1815 hurdle. Both these levels were last seen in February, but in our opinion they could be the most probable stops in a continuous buying momentum scenario. At the moment, we are seeing a downward correction that could be possibly setting the S1 1760 support level as a target. If the bears continue to dominate the scene, then the S2 1745 support level could be the next stop lower for traders, as it was used as a considerable resistance throughout April. The S3 1725 is the lowest level for this report and has been tested various times since the 1st of April but not breached. However, the RSI indicator below our chart is moving lower after reaching the 70 level, displaying some selling is currently in place. Now that's the end of this report. We hope you enjoyed it as well as found it useful. If you like this video, please feel free to share and subscribe. Thank you very much for your time. From everyone here at IronFX, enjoy solid trading.